Wondering how to start your journey in the stock market? It's a common concern, and today we're going to break it down into simple steps and investment options that are ideal for beginners. First up, index funds and ETFs. These are like the multi-tool of the financial world. Instead of putting all your eggs in one basket with a single stock, index funds and ETFs spread your investment across an entire index, like the S&P 500. This diversifies your investment and reduces the potential impact of one company's poor performance on your portfolio. Plus, they usually come with lower fees than actively managed funds, making them a cost-effective choice for those starting out. Next, we have blue-chip stocks. These are the shares of big, well-established companies with a history of financial stability. Investing in blue-chip stocks can provide a sense of security for beginners, as these companies are less likely to experience wild price swings compared to smaller, less established firms. Many also pay dividends, giving investors a regular source of income. Then we have dividend stocks. These are attractive for beginners looking for a steady stream of income. Companies that pay dividends typically do so on a regular basis, providing you with passive income, which can be a great advantage for long-term investors looking to build wealth over time. For those who prefer a more hands-off approach, robo-advisors are a great option. These digital platforms use algorithms to create and manage investment portfolios based on your risk tolerance and financial goals. They are user-friendly, usually have lower fees than traditional financial advisors, and provide a simple, automated way to start investing. Last but not least, arm yourself with knowledge. Before jumping into the stock market, it's crucial to understand basic investment principles, risk management, and investment strategies. Use educational resources like online courses, books, and financial websites to help you make informed decisions and avoid common pitfalls. So, to recap, start with index funds or ETFs for diversification and lower fees. Consider blue chip and dividend stocks for stability and regular income. Use robo-advisors for a simple hands-off investment approach, and never underestimate the power of education. By considering these options and gaining a solid understanding of investing basics, you can set the stage for a successful investment journey. Remember, investing is a marathon, not a sprint, and understanding these options is a great first step.